So I modified one of the existing studies in Sierra chart called the bid-ask quantity triggered stop study. And this is a great study for certain trade setups. One trade setup that I've been working on. But the issue I was running into is that, of course, since it is submitting a stop order, there's a risk, and this is what was going to happen. This is what kept happening, is that the orders pull away in nanoseconds, and by the time your client-side software reacts, the market's already trading at the next price. So you actually end up getting triggered on your stop order for a one-tick slippage. And if you trade bonds, you cannot afford a one-tick slippage. So I wanted to see if I can modify this study so that it basically sends a limit order at the locked price no matter what, but it triggers in the same way that the bid-ask quantity triggered stop does. And I'll show you how that works now. So actually, for the purpose of testing this, I tested it using a high threshold and a low threshold. So I'll go into the study itself. Here, bid-ask quantity triggered limit order, that's what I called it. And I put the threshold at 1 just to show you what happens when the entire bid or ask pulls away. And we'll see what happens here. We might have to wait a minute or two. So basically, when this ask gets pulled away entirely, it will send a limit order to either hit into what's left, and it won't hit into anything because by the time there's one, it'll be bid. So I'll end up with a bid at 450. And I tried it a few times, and it seems to be getting Q advantage pretty decently most of the time. So this is useful to prevent yourself from getting slippage on a buy stop entry, and we're just waiting to see the example of it. So we'll see if this goes bid here. There we go, right there, right there. You saw that go bid, and I'm 52 in the queue, and I actually joined the bid.
Order has been filled.
So I was filled in that case. But the thing is very important is that I was triggered at 450, and there was a limit order that was triggered right there. Now, in use case practice, I would not use it in this way. I would actually...
Order has been filled.
Yeah. In use cases, I would not use it that way because my threshold is set higher than 1, obviously. So I'm trying to hit into prices when there's around 25% of the depth left at an area, and I'm expecting that area to go bid almost immediately. But in certain circumstances, there's also a high risk of a one-tick slippage for certain entries. So I don't want to take that risk of that one-tick slippage because I'm trying to manage my risk. So that's what we did, right? So let's try it again. I'll set a sell stop there, and that's not a good example because it's already on offer. Let's say we sell stop here if this bid disappears. Let's see if that works. It's going up to trade the bigger order for now. Okay, let's sell stop here if this order goes to 0. So if those buyers drop out and it goes offered, I'll end up joining the offer at 4s. Now in use cases, I'm setting that somewhere around 150, but it depends on the market, right? So for the case of ZN, I would set it to around 200 and actually have the value going into the study automatically using another study called study value into study input. And anyone who's watching this, if you find this interesting, let me know and I can kind of discuss it to you further. Or if you think I can send you the studies and all that, no problem, because this is private. So if this bid disappears, I'll be joining the offer at 4. That's the point of this study. I want to sell if the buyers or the sellers give up their bid or ask, but I don't want to risk getting slippage. So in this case, I'll actually move it up by a tick. So there we go, right there. You saw the bid disappear at 4 1/4, and I joined the offer at 4 1/4. I didn't get filled, but the thing is still there. Okay, so I have a limit order at there, and my Q is 376. So that's the point of the study, is to reduce slippage on a buy stop entry. Basically remove the risk of slippage on a buy stop entry. And I'll go and show you which lines I changed in the code. Actually, all I had to do was change 2 lines. It took me a while to figure this out. So the first thing is I went into one of the existing trading studies in Sierra chart. You go to, it's in the file Sierra chart ACS source. You go to order entry studies, and it's in here. So I took the code for the bid-ask quantity triggered stop trading study, copied it in here, and I was playing with it for a while, trying different things. And in the process, I was learning a bit about C++. because certain things I just couldn't understand. And then all I did was I tried to eventually I specified the order price, and that's what ended up working. All I had to do was specify the order price. So for both the buy stop and the sell stop side, you had to do that. You also had to change the order type to SCT underscore order type underscore limit. And over here, order dot price one equals R underscore order price, which is the what had been specified as the order price earlier in the code. And I just figured that out by studying the code a little bit, and I'm pretty happy about it. So we'll see how it goes, and take care.